Hello there, welcome to this edition of Global Business Africa. In the course of the hour, we'll run through all the business news stories you need to know about from Africa and beyond. First, though, I'll run through the markets here for you. So we're going to be covering the listing of MTN Nigeria in a bit, but needless to say, very strong start on day one. The parent company shares in Joburg also a little higher, about 1% higher at 1428 GMT. Year-to-date gains, they're about 13%, but the really bad number here for you today is this. 2663.45 at the NSE 20 in Kenya. That's not just a low for the year, it's the lowest point in over a decade. You've got to go all the way back to March 2006 to find a lower closing number than this. And back then, it was 2375. Here's what's coming up tonight. Excitement greets MTN shares in Nigeria, and they bounced by 10% upon listing. Business groups in the US criticized President Donald Trump's decision to steeply raise tariffs on goods from China. And if beards are your thing, we'll show you how one entrepreneur is making quite the killing from grooming them. All that and more is in the pipeline for you tonight. But let's start in Nigeria, where the telecom giant MTN has listed the shares of its subsidiary in that country. Now, the company's stock was up 10% to 99 naira soon after listing. MTN Nigeria is now the second biggest company on the Nigerian stock market, but the company still has a bit of a guillotine hanging over its head. It's a $2 billion tax claim that the Nigerian government has essentially levied against it. MTN says that once that is resolved, it will sell more shares to the public and increase local ownership from the current levels of about 20% to 35%. Just before the float, the parent MTN Group owned 78.8% of the Nigerian business. MTN Nigeria accounts for roughly a third of the Joburg parent company's core profit.
I wanted to welcome the 700 beneficial shareholders who now have a direct share in MTN Nigeria, and also any future shareholders. On behalf of 1,800 MTNers in Nigeria, I want to pledge to you that we will look after your investments in an utterly professional manner.
So then this was a long anticipated market event. For years, people have been telling MTN, list, and now it's finally happened. So let's get reactions from Johannesburg, where MTN is headquarters, and Lagos, where this listing took place. Angela Coppola, Deji Badmus are joining us for this conversation. Deji, let's start with you. 20 billion shares going live at a price of about 25 US cents, shooting up by 10% when trading started. Walk us through the market reactions in Lagos today.
Well, it's been a positive one, Ramah, for MTN, and quite expected, to be candid. It did very well. I mean, for the first day, of course, doing very well. It didn't top the market activity, of course, but in terms of the value traded now, it's among the top, making around over $1 million now in terms of the value now, and selling over about 5 million plus shares. So it did very well, quite expected, and you could see the enthusiasm and that investors actually had, and that's the reason why it actually opened at 19 naira. That's 0.25%, 0.2 cent as you reported, and then it rose by 10%, and it probably would have gone beyond that 10%, but the 10% is actually the highest allowable increase, if you like. So it did well, and that's the expectation. Mm-hmm. And the expectation also is that it will continue to do well. We might see it, as a matter of fact, even rise beyond that 99 to as high as probably 108. I'm talking about beyond the 99 naira now to 108, maybe hitting around a dollar or so. Right. We just have to wait and see. If it doesn't hit a dollar, of course, at least half a dollar. But yeah, it's just as expected. It's done well.
Okay, so Angelo, the shares of the parent firm in Joburg, they're up 11%, actually 12% by today's closing numbers so far this year. Now, to be sure, it's still a long way from recovering the losses that we've seen on that particular stock in the last 5 years. But are investors on your end of the world, are they broadly betting that the worst of MTN's troubles, particularly in Nigeria, are over?
No, those woes aren't over just yet. There's obviously still that tax matter that you mentioned. That's outstanding. That's due to be heard on the 26th of June, and that's after an attempt to have that case taken off the roll failed last week, in fact. On the JSE, that share price, as you said, moved around 1% near the close. It's not done much since 2016, and that's what's bothered the investors in the past. It's unclear what investors are thinking at the moment, unfortunately. The analysts are, of course, equally balanced between holding, buying, and selling, but there's unrelated positive news, and it's starting to leave an impact. Investors in the stock are generally long suffering, and those who have still remained involved are hanging on there by their teeth, or by their fingernails, should I say. Others have sold out and won't enter just yet, because that upside that isn't climbing properly just yet isn't evident, and also it's not sustained. And of course, there are other mobile operators that they can invest in. In their defense, MTN's seen a fair amount of good news in the last couple of weeks. There's a new chairman in the shape of Mr. Jonas, who's the ex-deputy finance minister in South Africa. The governance structures have been tightened up, and they've extracted themselves, or plan to extract themselves, from non-core businesses and countries where they don't hold a controlling share. So there might be some light at the end of this particular tunnel, Ramah.
Indeed. Speaking of that tax claim, Deji, let me come back to you. So as Angelo pointed out, of course, there's that $2.1 billion tax claim still hanging over the company. And that tax claim comes from the federal prosecutor. But for the firms, the investors who bought into the firm shares today, what's the assessment of the court battle to come?
Well, if you look at the way investors actually embraced the shares today, you would clearly see that the investors are actually not bothered about that. I mean, it's something that investors think can be sorted out. You never can tell. We do not know how the case would go in court, but you know, some of the people that I've spoken to, some of the top lawyers I've spoken to in this country say MTN has got a very, very strong case. So, but you know, investors are not bothered at all by what's actually going on in court. They are not bothered that you know, this might end up against MTN. They are looking at the potential that this company is. They are looking at the fact that this is a company that has 60.3 million subscribers. They are looking at a company that has enough headroom to grow in terms of the digital segment of the market, and of course the data segment of the market. They're also looking at the fact that when you talk about fintech now, that's one area that MTN is going, and the potential for growth in that area is quite huge. So these are what they are looking for, and they know MTN is a well-run company in terms of corporate governance, you know, people by professionals. So these are what investors are looking at. And when they also look at the growth trajectory of MTN before it came to the stock exchange, it's been doing well, you know, giving out good dividends and all of that. So that is what investors are looking at. They're looking beyond this case in court. And then, as I said, quite a number of people are pretty confident that this case, this is not preempting anything at all, that this case eventually might go in favor of MTN, but you never can tell. But a lot of people still believe MTN has got a strong case. But then beyond that, investors are looking at the potentials that they can see.
All right, well, we'll come back to that conversation when eventually the case does go to court. Angelo, one last question for you. From HQ's perspective, now that their biggest subsidiary has essentially listed, to what extent will they be looking to sell down the stake?
Well, look, when they released their results here in South Africa some 6 weeks ago, Rob Shooter wouldn't be drawn on their future plans with Nigeria, or on that proposed listing, or in fact on the legal challenges. Shooter did say that it made sense to list the local entity in Nigeria so that locals could benefit from the upside. Increasing their stake in Nigeria sounds counterintuitive to some analysts because they want the locals to benefit. It also could be a means of raising capital, although the Nigerian market is quite tightly held, so it might not happen just as quickly as maybe MTN South Africa expected to happen, but it could happen in time when the market becomes more fluid, and that will take some pressure off the MTN balance sheet in South Africa in terms of investing in growth in that market. So there is that sort of upside that is being borne in mind at the moment, Ramah.
Indeed. And of course, gentlemen, I look forward to having this conversation with you in May 2020 when we do a one-year review of MTN Nigeria versus MTN South Africa with respect to the share performance on their respective markets. In the meantime, thank you very much for your company tonight. Angela Kopla in South Africa and, of course, Deji Badmus in Nigeria. Now, we're still, of course, in that very country. The leading Pan-African e-commerce retailer, Jumia, has fought back against claims that it padded some of its sales figures well ahead of its listing in New York. Now, the company described the information released by Citron Research as unverified, and in its view, it's aimed at damaging Jumia's reputation. Here's CGTN's Deji Badmus with more.
It's certainly not the kind of battle Jumia had anticipated when it made history by being the first African tech startup to be listed on the New York Stock Exchange in April. Just before that listing, the firm had in its first quarter report of 2019 claimed its gross merchandise value GMV grew by 58% to 240 million euros and that it added 1.3 million active users between the first quarter of 2018 and the first quarter of 2019. But in its 12-page published report, Citron Research alleged that those figures were fabricated and different from what is contained in the prospectus Jumia sent to investors in October 2018. It also alleged Jumia not only inflated its active consumers and active merchant figures from 20% to 30%, it did not disclose that 41% of orders were returned, not delivered or cancelled. Jumia is now fighting back, calling this press conference in Lagos to clear the air on the allegations.
First of all, we stand by disclosures in our prospectus because the disclosure in our prospectus and the way we define gross merchandise value, the way we define active consumers or active sellers, okay, is a good reflection of our business and related risk in all its material respects. So everything we have in disclosing our prospectus, we stand by it today. There's no discrepancy there at all.
Ramah also says Citron got it all wrong by focusing its report on a one-month period, as opposed to the 12-month review the company presented to the U.S. Securities and Exchange Commission, in line with standard practice in the industry.
Our GMV, our gross merchandise value, is orders, the value of all orders, of all valid orders on our platform, right, including shipping fees, value-added tax, but before discounts, vouchers, cancellations and returns. A standard model. This is the way that our peers, such as Alibaba, also look at their GMV, gross merchandise value. Okay. Active sellers, we see active sellers as a number of sellers who were active on our platform in terms of having received an order on our platform over a 12-month look-back period, prior to cancellations and returns. Active consumers, there's also active consumers who have actually completed a transaction on our site over a 12-month look-back period prior to cancellations and returns. Okay. So gross merchandise for us is gross of cancellations and returns, and that's the way we disclose it. But some of those reports were comparing active sellers, right, in 1 month when we are reporting over a 12-month period.
Jumia's share price has dropped to their lowest level since the Citron Research allegations emerged, with the stock recording 6 straight days of decline. U.S. investigators have now launched a probe into the allegations. Jumia has also not ruled out the possibility of exploring legal options in dealing with the situation. U.S. investigators have launched a probe into the allegations, and Jumia has not ruled out the possibility of seeking legal redress. For now, it all remains a matter of wait and see how this whole drama eventually pans out. Deji Badmus, CGTN, Lagos, Nigeria.
The Africa-focused gold miner Metalon Corporation is demanding nearly $132 million that it says is owed to it by the Reserve Bank of Zimbabwe. Metalon says the bank has since 2016 breached its very own policy of paying a portion of the value of purchased gold in US dollars. Now, in a letter from its lawyers to the RBZ and Fidelity Printers and Refiners, that's a subsidiary of the central bank, Metalon says that the proceeds were instead being paid in electronic dollars, known locally as RTGS dollars or Zollars, more informally. The Zollars officially traded at par with the US dollar, but their value essentially collapsed on the black market. The currency issue has in turn stifled output from Metalon's 4 mines in Zimbabwe, and that has triggered quite a few job cuts. The gold mining firm said it will take legal action, possibly likely in a jurisdiction outside Zimbabwe if it did not get a satisfactory response within 60 days. Still on matters to do with gold, it's the end of an era as one of South Africa's oldest gold mining companies looks to practically divest from the country. AngloGold is preparing to sell off its last operational mine in Johannesburg as part of a restructuring plan designed to return it to profitability. Here's CGTN's Sumita Naidu with that report.
AngloGold's Mponeng mine is 4 kilometers below surface, making it the deepest gold mine in the world. It still has another 8 years of production growth from the remaining ore reserve base of 16.8 million ounces. But the mine needs capital investment, and AngloGold has decided it won't be spending any more on this operation. It's now looking for a buyer.
The environment has changed very much for AngloGold Ashanti's South African assets. These assets are deep, they're very expensive, they're risky, and they were possible to get a return on investment in a different environment than we have today. The environment for the last 100 years in South Africa was conducive to deep level underground gold mines. It's not conducive anymore. You need very cheap electricity. You need very reliable electricity. We don't have that in South Africa anymore.
Mining is no longer a major contributor to growth in South Africa. The industry has been declining for years due to high costs, prolonged labor disputes and policy uncertainty. But it remains important for jobs. News of AngloGold's divestment came as no surprise. In 2018, the company sold off its Moang-Khotsong mine and retrenched 2,000 workers as part of a major restructuring process.
When we met with Calvin Dushnitsky, the CEO of AngloGold Ashanti, he focused more on the return on investment and indicated that if you look at the amount of money they need to invest in development of the mine to extend the life of mine to 2037 or longer, if he takes that same amount of money and go and invest it at any of the other mines they have, they will get a better return on investment outside the country.
AngloGold says that it is talking to potential buyers, but it hasn't divulged who at this stage. The company also says that it will retain its primary listing at the JSE and look for a secondary listing elsewhere. Sumita Naidu, CGTN, Johannesburg, South Africa.
Right then, corporate headlines. Let's start in Kenya. The country's biggest lender by assets, KCB Group, it expects to complete its acquisition of National Bank in Kenya by October. The Kenyan lender announced it would run the bank as a standalone subsidiary before then slowly integrating its operations in about 2 years. KCB is also finalizing the acquisition of $247 million worth of assets from Imperial Bank that went under back in 2015. A recent public opinion poll conducted in the United States indicates that ticket prices remain the most important factor when choosing a flight. And that in turn suggests that the 2 fatal crashes of the 737 MAX, the plane made by Boeing, that has had little impact on consumer sentiment so far. But at the same time, the Federal Aviation Administration Acting Chief Dan Elwell told lawmakers on Wednesday that he expects the plane maker to submit a software fix for the grounded plane for approval in a matter of weeks. He said he was concerned by the plane maker's lengthy delay in disclosing a software issue. Still on Boeing, China's 3 main airlines are considering jointly asking for compensation from the US plane maker for losses incurred because of having these planes grounded. This March, China was among the first batch of countries to ground the 737 MAX, all its variants, in the wake of 2 deadly air crashes concerning the exact same model. China has grounded 96 737 MAX planes in total. 53 of those belong to the 3 major carriers. And finally, co-founder of Bolt Mobility and 8 times Olympic champion Usain Bolt has unveiled a new brand of electric scooters in Paris. According to the company, the scooters are designed for improved security, comfort and longevity. That said, the firm will have to pay an annual fee of at least €50 per scooter for the first 499 units. The payment is in line with the city's plan to regulate the use of these devices in this city. That's a run through your company headlines. It's time for a short break. You're watching Global Business Africa. Here's what's coming up next. We'll be looking at the latest rally in cryptocurrencies, rises of over 100% in some cases. And the IMF is raising the red flag about Uganda's slide towards debt distress. We'll look at the numbers when we come back.
The world economy as we know it is about to change. Global business reports highlight emerging markets, developing countries, and dynamic sectors worldwide. We feature top analysts and newsmakers to provide perspectives on every facet of business. From an on-the-ground perspective, we provide you with balanced and objective assessments. Fast, sharp, and insightful. Global Business. Only on CGTN.
Africa is the nexus of enterprise, and Global Business will tell you why it matters.
From the mega investment projects to multi-billion-dollar mergers and acquisitions.
Africa today collects, just in terms of revenues from taxes alone, $545 billion a year. If you take 10% of that and you devote it to the energy sector, problem solved.
All this on Global Business, weekdays at this time on CGTN.
Welcome back to the program. Now, the South African government plans to include Bitcoin in this year's tax declaration forms. The move is seen as a bit of progress, if you will, towards recognition of cryptocurrencies as governments across the world drag their feet in developing regulations around virtual currencies, and maybe with good reason. The sector has witnessed quite a bit of volatility, with Bitcoin, for example, dropping from an all-time high of $20,000 in December 2017 to as low as $3,300 in early 2019. Now, the virtual currency, however, could be making quite the comeback. It's surged towards the $8,000 mark when Bitcoin is currently valued at about $7,946. All right then, so what exactly is driving this latest rally? Let's find out. Richard D'Souza is a partner at Altcoin Trader. He joins us now live from Johannesburg with more. Right then, Richard, good to see you. So Bitcoin doing particularly well, over 100% gain so far in the year to over $8,100. What's happening?
Yes, Bitcoin has gone up over 100% in the last 30 days, adding just on $70 billion to its total market cap. I think there is many reasons for this. The most significant being we've seen a lot of institutional interest in Bitcoin in 2018 and even more so in 2019. Now, these institutions have realized that Bitcoin is a scarce asset class, and if they are to play in this space in any significant way, they are going to need to hold a substantial amount of the asset. So they have been buying Bitcoin with OTC, over the counter, and these OTC deals have become more and more scarce, which has now resulted in these institutions having to buy Bitcoin and crypto assets on the open exchanges, which of course, because of the high demand and a lot of buyers, it has pushed the price up. In addition to this, the fundamentals for the Bitcoin network and a lot of the cryptocurrency networks are in place, and we're on a much better place than we were in 2017. We have been expecting a bull run. We are ready for a bull run, so it has very much been anticipated.
Right. What about Ethereum? Because we're also seeing a roughly similar curve plotting over there, up 90% over pretty much the exact same period. Are the same fundamental factors driving the rise in Ethereum, or is there a different story there?
Well, there's a lot of factors that influence that price. However, because Ethereum is very much bought with Bitcoin, a lot of the world exchanges have trading pairs of cryptocurrencies with Bitcoin. So because you have to buy your cryptocurrencies, including the Ethereum, with Bitcoin, this means that those prices are coupled. I cannot foresee in the near to medium future the uncoupling of Bitcoin from other cryptocurrencies. I believe that they will rise and fall in tandem as long as these trading pairs are in effect.
Right. I want to come back to something that you mentioned a little earlier, institutional interest. When you look at capital flows into and out of cryptocurrencies, where's the demand? Is the capital inflow exceeding the capital outflow into cryptos?
The capital inflow and outflow is very much theoretical figures. In practice, they don't really match up. We know that if you had to take the market cap of a coin, for example, in a bear market, it would be dramatically less. In a bull market, if that capital were to flow out from that asset, it would be dramatically more. So in practical means, those figures are not exactly as they are portrayed.
Right. It's been about a year now since SARS, the tax agency on your end of the world, said, look, we're going to start looking for a cut of the pie, as it were, from anything that you guys make on either in direct income or in capital gains from cryptocurrencies. But a year on, how's that worked out so far?
Well, we have certainly noticed a lot of our clients on our exchange at Altcoin Trader requesting documentation, requesting figures so that they are able to submit their tax returns in accordance with the new SARS regulations. However, because 2018 was such a bear market, I don't think that with only one tax season behind us, we really can't actually work out what has happened. In addition to this, SARS have, of course, protected themselves from tax players claiming a huge loss by ring-fencing the cryptocurrencies. So I think it's still early days, and 2019 is certainly going to be interesting in that respect.
Indeed. Indulge me a little, though, in trying to track how, from SARS perspective, how then would they come after individuals who would say, well, it's not really easy for you to know that Ramah bought 1,000 units of Bitcoin at this particular point in time, and therefore he owes the taxman about 100,000 Rand in appreciation. I mean, how will they end up tracking down who owes what on crypto assets to the taxpayer?
Well, there's a lot of meetings going on with the industry and the regulators and SARS, of course, and there is Bitcoin is not as anonymous as a lot of people think. So if it is known and if a start address is known, it is possible to track what transactions happened on that, obviously because it is a public ledger, a public blockchain. So if someone is not intentionally trying to hide the transactions on a specific address, it is possible, working with regulators, working with exchanges, to have some type of idea what happened. However, of course, if this is not going through a regulated exchange, SARS is going to have a really tough time to track that down and to try and figure out who traded what and who owes what.
Indeed. Richard D'Souza, partner at Altcoin Trader. Always fun talking to you. Thank you very much. Right then, so away from the business of cryptocurrencies, let's head over to Uganda, pretty much next door from where we are at the moment. The International Monetary Fund is warning that in less than 3 years, Uganda will be in deep debt distress. The IMF is essentially forecasting that the East African nation's public debt levels will rise to over 50% of GDP in the 2021-22 fiscal year due to increased borrowing for infrastructure. With the details, here's CGTN's Michael Baleke.
Uganda has been borrowing heavily to finance its ambitious infrastructure program. This recently commissioned 183-megawatt Isimba hydropower dam is one of such projects. Government secured a loan to meet more than 80% of the cost of construction, and the IMF warns Uganda's debt is becoming unsustainable.
Before borrowing, we should have an assessment of the previous performance of the loans that had been acquired, as an opportunity for lessons to be able to see how we can get even better yield from the next loan that is in offering. The other bit is that Parliament shouldn't simply be seen as a rubber stamp, as is the case now in Uganda, in Kenya, and in a number of other African countries.
Uganda is using the loans to build new roads, bridges and electricity projects. Government is also planning to invest in an oil refinery and pipeline, among others. With the rising debt, there are fears that government is going to spend more on interest payments compared to key sectors like health and education.
If we fail to actually sustain our debt, then service delivery is most likely to actually be worse. And as an ordinary Ugandan, one of the things that crosses our mind is that, do we need to borrow now? Do we need to borrow for all these things now? Is our country coming to an end now? Is Uganda ending today?
Poor planning and the runaway levels of corruption have also been blamed for the rising debt. This Entebbe Express Highway cost Ugandans close to $500 million. It's supposed to be a toll road, but since its completion a couple of years ago, the toll fees are yet to become operational, and yet the interest is rising. But the Kampala government insists they are borrowing cautiously and selectively with the intention to grow the economy and boost domestic revenues.
Most of our debt has been contracted on concessional terms. Please take care of these concession terms. longer period of repayment, very small interest rate. By the time the loan becomes due for servicing, we're already reaping from the benefit of that loan.
But the IMF cautions that some investment projects may not generate the much envisaged returns. Michael Baleke, CGTN, Kampala, Uganda.
It's 18:30 GMT. You're watching Global Business Africa. Time for a short break. Here's what's coming up next. Business groups in the US criticized President Trump's decision to steeply raise tariffs on goods imported from China. And we'll tell you why Huawei executives are unfazed by ban of its products from the United States.
How will your world change today? What happens here? What happens there? Or what you make happen for yourself? If it matters to you, it matters to us too. Your stories are the stories that need to be told. Africa Live. Find your voice.
Welcome back. Let's recap the stories making your headlines at this hour. Starting in Libya, the Eastern Commander, Khalifa Haftar, has held talks with Italian Prime Minister Giuseppe Conte. The Thursday talks follow another meeting between Conte and his Italian counterpart, Fayez al-Sarraj. The Italian Premier expressed his concerns over the rising tensions in the North African nation. Once again, he called for a ceasefire. He also pushed for a political solution to the current stalemate in the North African state. Sudanese opposition leaders have criticized the ruling military council for suspending talks with their representatives. They've been meeting over a peaceful transfer of power. The suspension has dashed hopes of a speedy final deal between the military on one hand and the protesters on the other that could resolve a standoff that's underway ever since the military ousted and arrested the former president Omar Hassan al-Bashir. And a report by Safeguarding Health in Conflicts organization has documented hundreds of attacks on health workers in 23 countries. 4 of the top 5 countries in that report are Arab nations. And in the Democratic Republic of Congo, the fight against the spread of Ebola has been scaled down because of insecurity. Yemen alone has recorded 53 incidents of attacks on health workers in 2018 by use of explosive devices and aerial attacks. In Libya, 47 such attacks are recorded against healthcare facilities. And finally, drones are going to be used in Ethiopia to execute humanitarian projects, agricultural development, as well as tackle the scourge of tsetse flies. A new project by the World Food Programme is taking shape, and stakeholders are receiving training to equip them with the ability to fly these drones properly and to also gather and interpret the data that they gather. 38 trainees who came from 11 organizations from across Ethiopia are taking basic trainings to that end. That's a run through your headlines. Right then, matters further afield now. Foreign direct investment into China was up 6.4% year on year to $44 billion in the first 4 months of the year. The country's non-financial outbound direct investment was about $35 billion over that same period, up 3.3%. According to the country's Commerce Ministry, in that 4-month period, Chinese firms invested $4.6 billion in 50 countries along the Belt and Road, accounting for about 13% of overall investment. At the same time, U.S. investment in China, that was up 24%, despite the ongoing trade tensions between the world's top 2 economies. China says it will have a necessary response ready if the United States continues to escalate this trade war.
The U.S. approach of bullying and extreme pressure is contrary to multilateral trade rules. We strongly oppose that. If the U.S. continues down this path, we will have to take necessary measures in response. China has always maintained that trade issues can't be resolved by repeatedly increasing tariffs. We have the confidence, resolve, and capability to cope with any risks and challenge.
President Donald Trump has signed an executive order declaring a national emergency. His objective this time is to bar US companies from using telecommunications equipment made by companies which authorities in the White House say pose a national security risk. Here's CGTN's Jim Spellman with more from Washington.
The administration says this order is, quote, company and country agnostic, but it is widely perceived to be aimed at Chinese tech giant Huawei, a major player in 5G technology. This executive order will effectively ban telecommunications gear made by companies owned or controlled by, quote, foreign adversaries, arguing this gear could be used to steal sensitive data or be used in hacking attacks. According to the executive order, this equipment, quote, augments the ability of foreign adversaries to create and exploit vulnerabilities in information and communications technology or services with potentially catastrophic effects, and thereby constitutes an unusual and extraordinary threat to the national security, foreign policy, and economy of the United States. Speaking earlier Wednesday before this executive order became official, China's foreign ministry said this.
For some time, the U.S. has been abusing its state power and leaving no stone unturned to deliberately smear and suppress specific Chinese companies. It is neither glory nor justice. The world has been clear about their motives. We urge the U.S. to stop cracking down on Chinese companies on the pretext of security issues and to provide a fair, equitable, and non-discriminatory environment for Chinese companies' operation in the U.S.
The U.S. government is already banned from buying some Huawei gear. The company is suing the U.S. over that ban, arguing their equipment is safe and that the U.S. has failed to present any evidence that the company poses a security risk. The Trump administration now has 150 days to put together the rules on how this executive order will be implemented, including what countries and companies are on the list. Interim rules could go into effect at any time. Jim Spellman, CGTN, Washington.
Now, one of the companies targeted by that order, Huawei, remains unfazed. It's considered a global leader in 5G technology. But as the Trump administration ratchets up the pressure, there's no evidence that the company or its 5G tech poses a security threat.
World's biggest economy versus a private telecom company. Many consider this a lopsided battle. A concerted U.S. campaign to target Huawei, the telecom giant, which promises to transform lives through technological advancements. Hours after the U.S. president signed an executive order effectively banning American companies from using Huawei's 5G network. Huawei issued a statement calling the restrictions unreasonable and which infringe upon its rights. It asserted that Trump's decision would only hinder development of 5G technology in the U.S. Earlier, the company had also discounted fears of any adverse impact on this revenue.
I can say that our position in this regard is consistent. Our business in the United States is not that big. Due to our global operations, any change in one country has little impact on our global business.
The U.S. and a few other nations believe that Huawei poses a security threat, a charge which many experts say is not supported by evidence. MIT Media Lab founder Nicholas Negroponte has also questioned these accusations, calling Trump administration's Huawei policy a geopolitical move. But the company is still willing to address all concerns of foreign governments by offering to sign a no-spy agreement, while vehemently denying that its work poses risks of espionage. In the mobile phone arena, Huawei is currently the largest Chinese vendor by volume and the number 2 worldwide by sales, just behind Samsung. They produce some of the most advanced chips in the world, including those in mobile phones and AI processors. On Wednesday, it unveiled a domestic artificial intelligence database named GulfDB, which combines data and intelligence and embeds AI capabilities in distributed databases. But the jewel in the Huawei's crown, it seems, is the company's preeminence in 5G technology. In January, the company launched the world's first core chip specifically designed for 5G base stations. Huawei says the chipset called Tiangong will support simplified 5G networks and large-scale network deployment around the globe. It's also launched its first 5G modem, known as Balong 5000, which it claims is the world's most powerful modem. As U.S. try to block Huawei's rise, the company has secured over 30 foreign commercial 5G contracts, shipping over 25,000 5G base stations globally. According to tech experts, 5G is indispensable to developing the technology of the future. So a blocking campaign is bound to fail. With Nyang and Yang for CGTN.
Now, that decision to steeply raise tariffs on a range of goods imported from China has generated sharp criticism from business groups right across the US. Many industry associations are saying the tariffs will harm the interests of not just American companies and the people they employ, but ultimately, they say, it'll harm consumers and the US economy.
U.S. trade organization Tariffs Hurt the Heartland issued a statement voicing strong opposition to tariffs on Chinese goods. The organization says tariffs are paid to the U.S. customs by U.S. importers, and that they punish U.S. farmers, businesses, and consumers. A nonprofit that provides cribs to low-income families made an appeal on the trade organization's website. Please stop the trade war immediately.
As a nonprofit, we never thought tariffs would affect us, but they do. President Trump says that China is paying these tariffs, but I see the cost on my invoices. A 10% increase in the tariff means that 10% more babies are at risk. President Trump, stop the trade war now.
Not only are industry associations voicing their objections, but also mainstream media. On USA Today's website, an article titled, "How the Trade War with China Could Hit You: Higher Prices, Lost Jobs, and Falling Stocks." On CBS News, China tariff retaliation clobbers U.S. stock markets. And the New York Times has had wide coverage about the negative impact trade frictions are having on U.S. financial markets. Many Americans have expressed their dissatisfaction on social media. One user said the United States has not won, and it's Americans who end up paying the tariffs. Another pointed out one of the reasons for the Great Depression in the United States in the 1930s was trade tariffs. And another said as American farmers' products rot in warehouses, China is already finding other countries to do business with. Jin Chao, CGTN.
Authorities in China say they will broaden international cooperation in enforcing intellectual property rights in order to create a favorable business environment for enterprises in China and overseas. Chinese custom officials say they will improve information sharing with other countries, as CGTN's Daniel Bay now explains.
China's foreign technology use has quadrupled in the past decade. The latest figures show the number of patents and royalties paid by China increased to $35.8 billion last year, ranking 4th worldwide. At the same time, the government continues cracking down on intellectual property violations. In accordance with the law, China is improving its legislation system and enhancing administrative law enforcement for IPR protection.
The High Court has set up a court for intellectual property rights cases to speed up the reform of the civil, administrative, and criminal trials for IPR. In 2018, public security organizations nationwide cracked nearly 19,000 cases of criminal infringement and counterfeiting.
In its Doing Business 2019 report issued last October, the World Bank indicates that, out of 190 economies across the globe, China ranks 46th in terms of business environment. In recent years, the People's Bank of China, in conjunction with government agencies, has expedited the unveiling of opening up measures. They've also made a series of positive achievements. Gan says IPR is key to optimizing the business environment. With IPR protection, our business environment will be optimized.
We give full play to the advantages of customs law enforcement and promote the comprehensive management of the whole chain of intellectual property protection. On the one hand, we actively encourage all countries to deepen law enforcement cooperation and improve the international network to combat the illegal activities of cross-border infringement. On the other hand, the linkage with other domestic departments is strengthened, and the Public Security Department has established the system of case information.
IPR protection and the optimization of the business environment requires all countries worldwide to cooperate closely. Experts say China will always align with the internationally prevailing rules to protect IP according to law and on equal footing for both domestic and foreign investors. Daniel Bay, CGTN, Beijing.
Still in China, the government over there is planning to put 5G communication into full commercial use by 2020. That essentially will translate into vastly faster internet speeds, but also much greater need for professionals in related sectors. Now, according to recent surveys, demand for employees in China's 5G sector rose by over 30% year on year in Q1. CGTN's Chen Tong explains on what's hot tonight.
The China Academy of Information and Communications Technology predicts that the direct output value of the 5G market will reach over 6 trillion yuan by 2030, create 8 million jobs, while industries related to 5G utilization will create over 11 million jobs. The problem is, it won't be enough for these 20 million employees to understand only 5G technology. Human resources specialists say the big demand for staff now is in jobs that will develop software needed to support applications and terminals.
5G will change how cloud platforms and portable devices work, and it will change applications in the Internet of Things such as autonomous driving. Hardware will support those software developments, but the professional demands there are not as large as in software development. There is a great shortage of professionals who understand both electric engineering and information technology right now.
The same pattern will also be true in the longer term. It won't be enough for companies to just find professionals who understand only telecommunications. They will also have to understand how the communications are being used on the receiving end.
The biggest difference between 5G and previous telecommunication technology is that 5G will change how the internet works in a society. That means there will be a need for professionals who understand both 5G and other industries. For example, if I understand only telecommunications, I would probably have no idea about real estate. So how could I put 5G technology into office buildings? We need professionals who understand both industries.
And the same will be true in other industries, of course. Logistics, surveillance, and even medical care can benefit from 5G technology, while professionals who are cross-trained in multiple fields are urgently needed. Salaries they can command are correspondingly high. Liepin.com's data also show that the average annual salary for 5G-related jobs is over 260,000 yuan, almost double the average salary in the telecommunication industry. Chen Tong, ICS for CGTN, Shanghai.
Right, then a quick run through some commodity prices here for you. So oil prices, a little bit of a bump coming through on Brent crude, 72.89 is a relevant number a little earlier on. Cocoa and coffee displaying a bit of resilience in the markets today, up by over 1.7% in the respect of cocoa and marginal gains on the coffee contract. But don't be fooled, on a year-to-date basis, these guys are not doing particularly well. That's down 3%. These guys are down by at least 14% so far this year. And this decline has been continuing for a couple of years now. Here's what's coming up. We'll explore how an entrepreneur in Nigeria is cashing in on the growing trend to groom beards.
The greatest journeys, the greatest sights, the greatest adventures.
Here in Kanata, this weir allows the locals to walk on water.
We're far more than just TV news. We're your passport to the wonders of Africa.
To bring you stories of struggle, survival, and hope.
So let's explore. CGTN. See the difference.
You don't find the stories of North Africa by sitting on the sidelines. No one else will take you where we can in North Africa. And no one else will show you what it's all about. CGTN, see the difference.